This is a preview video. Thanks for joining us at xm.com. We'll be looking at the latest inflation readings out of the Eurozone and, of course, the outlook for the euro. I'm Christina Marujos. With me today is our investment analyst, Achilleas Gerkolopoulos. Just a week before the next European Central Bank meeting, Achilleas, will get the latest CPI readings out of the Eurozone. Is inflation expected to ease further? And if so, what could that mean for ECB policymakers?
Good morning, Christina. Yes, we are getting the preliminary CPI report for February this week. On Thursday, we will get the French and the German figures. And then on Friday, we will get the Eurozone aggregate print at 10 a.m. GMT. Now, on Thursday, the German headline CPI is expected to slow to 2.6 year-on-year change. If confirmed, this will be the lowest annual increase since June 2021, so almost 3 years ago. Moving to Friday, of course, and the Eurozone aggregate headline CPI is also seen dropping to 2.5% and essentially cancelling out the peak cap we saw in inflation in the previous 2 months. More importantly, the core indicator, of course, will be closely scrutinized because it has proven to be stickier than expected. Economists are looking for a 2.9% print. This level, along with the headline figure, are essentially miles away from the recent peaks we have seen. However, some ECB doves will be displeased because they're looking for a significant downside surprise across the board in order to justify a rate cut at the March meeting. Having said that, we have to highlight that there is ongoing concern at the ECB about growth. The recent PMIs, especially from Germany, confirm that the largest Eurozone economy is in trouble. It managed to contract in 2023, and that weak momentum is continuing in 2024, partly on the back of the recent budget issues. Now, put together, should inflation expectations get confirmed and, of course, inflation eases further, then the ECB doves will probably try to get an agreement at the March meeting about the date of the first rate cut. Of course, at the next ECB meeting next week, we get the ECB staff projection, so that will be a very important factor as well. However, if we get stronger inflation prints this week, along with a weak growth outlook, it means that stagflation essentially describes the situation in the Eurozone. Should this is the case, then there will be an open debate, essentially a rift in the ECB ranks, as the ECB hawks will, of course, not accept the possibility of a rate cut anytime soon.
So taking all of this into account, Achilleas, how could we see the euro perform this week?
Recent economic data are showing an economic convergence between the UK and the Eurozone. And of course, this is depicted in the euro-pound pair. A stronger set of inflation figures this week could help the euro-pound pair to climb towards 0.8581. However, if we get weak numbers, then the market will try to price in a more aggressive rate cutting cycle from the ECB and therefore push euro-pound lower, with the first target being the 0.8497, which is the recent low.
Achilleas, thanks so much. This was a preview video. Thanks for watching at xm.com.